Hi, I'm Ken from Crypto Trading KS. It's great to see you again. Let's run the numbers. Bitcoin currently up 0.45% to 57,817. Ethereum rocketing up plus 5.98% to 4266. My goal is to assist you to be more of a financial blessing to yourself and those you love, and also gain real wealth in the process. Rule 774, master yourself to master the market, an incredibly important rule for overcoming self-sabotage and self-doubt, and also creating a positive life trend. Just as cryptos have a trend, your life has a trend as well. In our community, we focus on real wealth. Real wealth is much more than money, but of course includes money. Money is a wonderful source of security, but it also opens access to the better things in life. But as we know, gaining access to the best things in life doesn't mean much if you're not feeling at your best. Having inner and outer peace, purpose and fearlessness, empathy and love, courage and honor, kindness, authenticity, that is the icing on the cake, if not the cake itself. You are worthy and unique. You deserve kindness, love, meaning, and every success in life. This is a recipe to get rid of self-sabotage and self-doubt. Let's have a look at the market, and we know Rule 45 is really important. No alt can escape Bitcoin's gravity. The market's been coming down of late. We see this positive price action in Bitcoin. What does it mean? It means the market moves up with it. We can see a lot of green in the market. The interesting thing is that there's a gearing or leverage relationship directionally between Bitcoin and the alts. If Bitcoin moves down a certain percentage, the alts on average will move down by a greater percentage. When Bitcoin moves up by a percentage, the alts will move up by an even greater percentage. You can see how it's playing out in the market. Bitcoin just up a modest 0.36%, but look at some of these other alts. Look at that, BNB up nearly 8.5%, EGLD up 15%. It's just fantastic. When you understand this gearing relationship, everything changes in the crypto market. A lot of people, even influencers, still don't understand the nature of the relationship between Bitcoin and the alts. What I mean is directional positional correlation. As a community, we use this particular mathematical property to our advantage. We know that there's always things happening in the market. For example, the Mt. Gox remediation. The media is blowing this out of all proportion. It's basically saying that $9 billion of Bitcoin will flood the market and tank the market. Not really realistic from the work that we've been doing here on the channel. We also have the upcoming debt ceiling and always the Evergrande crisis in the background, on the back burner. What's really fascinating about these things, when we look at the debt ceiling crisis, there's not been much in the way of press, but when it comes closer to December the 3rd, there's going to be a tsunami of negative press about it. Also, Evergrande, there's not too much on Evergrande, it's really died down. What we do in our community, we use these negative news momentum events to actually dollar cost average in. They're the ultimate strategy. Looking at the crypto fear and greed index, we can see the fear and greed index is currently 34. That means the market is fearful. We're not. Inside our community, we're partying. This is fantastic. We're getting our alts on sale. Generally, media stories are very unreliable. They're sensationalistic by nature and therefore very misleading. I often say, look or listen to the news with one eye closed, one ear closed, and half your brain turned off. It is much more profitable. The news exists based on sensationalism. We can see the Mt. Gox reserve has not changed. It's still 137,890. It's not even being remediated at the moment. From a search of the Wall Street Journal headlines, we just still have our original article from a couple of days ago about the debt ceiling. We have no further news. That means they're basically downplaying it as a story, but that will change the closer the debt ceiling gets. Looking at the Chinese property market, we see Evergrande here in the blue, Fantasia in the pink, and Country Garden in yellow, Greenland Holdings in the green, and Vanke in the white. We can see that the price of these property developers, who between them share net debt of $920 billion and net sales of $2.15 trillion, we can see a slight increase in their share price. This is actually really good news. They've not continued to fall and plummet in price. They're finding some support. That is actually really good. What we really want to see here is a bounce in price. We'll keep our eye on this. I always like going independently of the news for the reasons that I outlined before. It's good to keep our eye on China crypto as a Google search term. Why is that? Only in relationship to buying the dips. We can see that there are a couple of news stories out about China taking aim at extremely harmful crypto. One particular headline that got me laughing was this: China targets crypto mining at state-owned enterprises. It passed a law saying that any crypto was illegal and the transactions related to were illegal, and now it's targeting state-owned enterprises. Didn't they get the memo? Sometimes people look for reasons for the crypto market to sell off. There is not one reason. There's generally thousands of reasons. It really goes down to the order book and all the different ideas people have on buying and selling. But Ben put out a very interesting article, Extremely Harmful, China's Harsh New Cryptocurrency Moves Sends Shudders Through the Market. Ben, this is really old news. What you doing, my friend? When we go down here, I think this was really interesting to note. The sudden drop worldwide mining capability slowed transaction times from the algorithmically set 10 minutes per block to more than 12 minutes. Ben is talking about when the China miner issue happened. The thing to note is that it is not algorithmically set. It's actually never been 10 minutes. If you go to BitInfo charts, you can see the current block time here for Bitcoin and Ethereum and a variety of others. It's currently 9 minutes and 40 seconds. It's actually never ever in the history of Bitcoin been 10 minutes. Ever. This is something out of the masterclass, but I'll just take you through it very quickly. From the inception of Bitcoin, which was the 3rd of January 2009, to the first halving, that was 1,425 days, or 2,052,000 minutes. The halving occurs every 210,000 blocks. That was one block every 9.77, and there's a few decimal places after that. The critical thing is it was not 10 minutes. When we look at the halving process between the 28th of November 2012 and the 9th of July 2016, the block time per minute was 9.04457 minutes per block. And then when we look at the 2016 halving cycle, which lasted 1,402 days, the average time per block was 9.6137 minutes. You can see it's not algorithmically set. It's very easy for people to look at these things and say, it's every 10 minutes. But why do they do that? It happens a lot. If we go to Bitcoin's white paper and just search for the term minutes, we see that magical, mythical 10 minutes in there. But there's a problem. As a lawyer, you look at it and say, if we suppose, it doesn't mean the blocks are going to be generated every 10 minutes. But this became folklore. Folklore turned into fact. And the issue is, it's never been 10 minutes. I wanted to point this out because I think it is really, really important. The block time, the minutes per block, varies all over the place. It's a function of so many things, like the difficulty level, which is really important, that directly influences it. And difficulty is always dynamically adjusting. You can see the network difficulty level from blockchain.com. It's really interesting how it's always moving in line with the market and what's happening inside the market as well. When we look at the search term for Bitcoin, we can see that in the last peak, we had a massive increase in interest for the term Bitcoin. But if you look down here, this is something that I want to point out. If you look across China, absolutely no interest whatsoever. Now let's have a look at NFT, non-fungible token. We can see the NFT interest has been really increasing, but where is it coming from? What's this? China? Speaking about NFTs, there's something that I want to let you know about. They're called NFT domains. They're not rented like normal internet domain names like smile.com. When you get something like smile.crypto, you actually own it forever. And what's more, this actually becomes an address that you can use to receive any type of cryptocurrency. They're just fantastic. I have a special link in the description of this video if you're interested in that. And some of these domains, when we originally go back to the .com domain bubble, if you like, there were many domains that sold for literally millions of dollars. Just to give some examples, carinsurance.com was sold for nearly $50 million. Insurance.com, around 36 million. You can see that some of these particular internet domain names sold for enormous amounts. These NFT domains are the next internet domain names, and they're going to be served through the internet file system. That is, the domains, the NFT domains, will be decentralized. They'll have decentralized file storage, decentralized IP addresses. They'll be found through the decentralized internet, Web 3.0. I would urge you, if you want to get one of these NFT domains, really do so now. I've provided a link in the description of this video to help you out. The time is right to do it. And you can use NFT domains as your universal name across apps and websites, as a payment address for your wallets for crypto, and as a website URL. How cool is that? I think that this has much more value than just about anything else, and a lot of people are not looking here at the moment. Interest in the metaverse has been sparking high, but when we look at interest by region, it's China again. This is really fascinating. It's always interesting to dig beneath the news. That's what we do as a channel and a community. When I look at the current correction in price, it's not really a correction. All that's happening is it's coming down to test support, to reconfirm support, to make its way forward. That's about it. It's not really the end of the world or any doom and gloom issues at all. It's just pretty much normal price action. But with price action, we need to be aware of key levels. When we look at Bitcoin's price, it's currently trading at 57,872. It did come down and just touch this 55,590 support level. And it may come down further to 49,305. It just depends how riled up the media can get the average retail investor. The big institutions know what they're doing. They know the trend of Bitcoin. They know where it's headed, but they always want to get the best return. Things like the debt ceiling, things like the Chinese property market, or China bans being recirculated all the time. Things like Mt. Gox, you pick it, they're going to use it to try to drive the price down. Our community thinks institutionally. We do not think like retail investors. That's why I never have a picture of a open face going, oh my God, the market is dying. That we'll leave that to other communities and other channels. What we're about is making more financial blessings for yourself and those you love. We do that through science and mathematics and balanced analysis. What is the potential here? The potential is that Bitcoin's price comes back to test around this $52,500 mark, and I believe it will find quite strong support here. Note that this particular red area is not a support level. That's just saying that the debt ceiling becomes an issue in about 13 days. This Evergrande is an issue in about 38 days on the December the 28th. What we're seeing here is nothing more than a normal action in price. Price is always moving in a wave. It's always moving up and then moving down, moving up, moving down, finding support, bouncing from support, overcoming resistance, maybe coming back and retesting and shooting up. This is always the way. We just trade the chart that we view. We never panic. We don't do the light switch effect, which I'll talk about later. We're aware of the risks because we want the risks to play out to lower the average buy price. We always have an upside and a downside risk strategy in play, and also the boring risk strategy in play. What happens if it just consolidates along here? We're in advance of the market. We're literally making our own news. We know how to interpret the news. It doesn't phase us out. We use the news to our advantage. It's really important to also understand that the crypto market is just one market. We have the stock market, which is considerably larger than crypto globally. We have the bond market, which is also considerably larger than crypto, and money always chases the best return and the lowest risk. Smart money is always circulating money into bonds, from bonds back into stocks and into crypto as well. You can see the faucet is not going full blast at the moment. Crypto is quite a tiny market. Of course, it's above 2 trillion at the moment, but we're trying to look back to actually get numbers that make sense. If we think the stock market was around 100 trillion in November of 2020, the bond market in August of 2020, this actually explains to people if 10% of stocks and 10% of bonds flowed into the crypto market would literally explode. This is a reason I always take you through investment substitutability, because it really matters. We can see over the past year, stocks proxied by the S&P 500 are up 32%, gold is down 1%, and Bitcoin is up 217%. What do we see when we look through the main market, the stock market? And we need to be aware of bond prices and bond yields as well. You will see a lot of information about the DXY, the US dollar. Oh, strong US dollar, Bitcoin will fail. You'll see all sorts of stuff. We go through independent sources to determine what is going to happen and what has happened. We can see the volatility index, the VIX. This is the fear gauge of the stock market. We've seen fear come down substantially. It's also rebounding to a particular resistance level. It's starting to come up in the market, but this is not a problem. We get a problem when we get above certain fear levels, and you know that I've put this particular level at 25.39. This is just one indicator that we need to keep our eye on. We can see the NASDAQ 100 making its way up. It doesn't matter too much about the fear in the market for the NASDAQ. It's just partying hard and partying on. And you can see Bitcoin's fingerprint in the background. This is showing you the relationship between Bitcoin's price action, and we know Bitcoin's gravity impacts every alt, and the stock market. It's really useful to see that. We can see light crude oil came back to test this resistance and has been rejected, and we can see Bitcoin's fingerprint in there, playing in there. We can see bond prices hit a level of resistance. It's come back underneath resistance and it's trying to test it again. And we can see Bitcoin's fingerprint. What is it doing in the background? We can see bond yields. Bond yields give a reasonably accurate indication as to what Bitcoin is doing. Not exact, but an approximation. We can see as yields come up, it's really good for Bitcoin on average. We're looking at the gold price. We can see gold has hit a level of resistance just like bond prices have hit, and it's backing away from that. But it also has a lot of support underneath. We can look at the DXY, the US dollar currency index. We can see Bitcoin going up as the dollar goes up. The dollar goes down, Bitcoin goes down. The dollar goes up, Bitcoin goes up. You can see it as plain as day. But a lot of people, a lot of economic commentators will say inverse relationships exist. That means that as the dollar comes up, Bitcoin must go down. It doesn't must have to do anything. It does what it does. And that's why we look at the charts and go independent of the news. Listening to the news can cost you more money than just about anything else. To gain a greater perspective on the long-term movements, we have a look at the KS model, which is a crypto technical trading model based on institutional price psychology. We're in the bull market segment of the current psychology of the halving cycle. We always have bull market, bear market consolidation, bull market, bear market consolidation, bull market, bear market consolidation. This is just the way it goes. In the bull market, there's overwhelming positivity, but that doesn't mean there's not overwhelming retracements. It happens all the time. For example, in the 2016 bull run, we had a very large percentage increase, nearly 87%, followed by a 20% drop, followed by a 38% increase, followed by a 40% drop, then a 38% increase, around 15% drop. People really love, of course, the positive movements, but we've got to understand the negative ones. The negative ones will shake you out of your position if you don't understand them. We can see this particular pullback here. That's very much like what we're going through at the moment. And when we look at this, we need to understand when price pulls back, if we are in the right segment of the market, it's just a buying opportunity. And that's exactly how institutional investors and traders approach it as well. Tales from the Man Cave put this fantastic thing together. What talent Nick has. It's all about the Pac-Man eating the tails. What we do is catch knives in the bull market. And what it's all about is lowering the average buy price. This little Ken man that comes into the market and just slurps up those negative prices, that's what it's all about. And our community is very, very strong. We focus on probabilistic fearlessness. Thanks so much, Nick, for your incredible artwork. Fidelity Investments put out this particular analysis. They're expecting mathematically that Bitcoin will reach $1 million per Bitcoin in 2026 and over 10 million per Bitcoin after 2030. I had some really interesting comments in the comments section on YouTube. They're always interesting, and we have an incredible community. Hi community, you're awesome. We had one particular community member say, Ken, how could it be 10 million per Bitcoin? It would just absorb all the money in the world. I love questions like that because it's really, really helpful to everyone to understand. The Visual Capitalist put out a thing called all of the money, all of the world's money and markets in one visualization, May 27th, 2020. What I want to do is to go down here and just give you an idea of a couple of things. One, for example, what this particular analysis shows is that only 7% of the money supply is actually physical. If you wanted all the banknotes in the world, you would be rather upset because you could only get 7% of the total supply. Already 93% of money is non-physical. That means digital. Very interesting point. Now, as we look through the particular levels of wealth that are in the market, I want to actually draw your attention to derivatives. Derivatives are very important. The financial system is basically built on derivatives. Derivatives are contracts between parties, such as options, such as warrants and swaps, futures and forwards contracts. The high-end notional value of derivative contracts is $1 quadrillion, and this was back in 2020. There's a lot of money sloshing around the system, quite easily able to absorb these larger figures. And the interesting thing is that the money supply is always expanding. It doesn't stay static. It's always increasing, and it's increasing very, very quickly as well. The other thing to note is that Bitcoin and crypto are global assets, and all the governments from all countries are inflating their money supply. These estimates will actually occur over time for a lot of economic reasons. There was still a little bit of confusion about the S-curves. What Fidelity Investments said is less than 3% of the population holds Bitcoin. Just swap out the term Bitcoin for a savings account or a bank account. Think about it like that. And less than 1% of the population has an active Bitcoin address. If less than 3% of the population held a bank account and less than 1% had an active bank account, I think that parallel makes sense. What you can see is that there are people holding, for example, like a crypto bank account, Bitcoin, but an active bank account is different from an inactive bank account. I hope that helps, Rect. Perhaps just think about Bitcoin as a digital bank account and just swap that term out. I think that would make a lot more sense. Let's have a quick look through the top 8. We can see Bitcoin is just retracing, seeking to make support level. And that is absolutely normal and fine. And it's really good. It gives us an opportunity to get in at a lower average buy price and ride this wave up. The expectations, as you know, are for higher prices. We can see Ethereum doing a very similar thing to Bitcoin, just coming back, seeking to find a level of support. It may not come back all the way, and as far as it comes back, we're really, really happy. The lower the better, because it means that we can just pick up cheaper crypto. Binance Coin is coming back to a level of support as well. There's horizontal levels and diagonal levels of support. We can see Solana. Solana sold off pretty hard, came back, found a level of support through this area at 186.61, and then bounced like a Super Bowl. They often do this when very, very strong cryptos that have the attention of the market, when they sell off, they tend to really bounce very hard. We can see XRP. It's holding up really well around its current price. You might remember yesterday that I said that I was starting to increase my lower 10-5-10 support levels up because I see the market starting to turn around. We may not get this significant sell-off. We absolutely hope so, because we want to lower the average buy price, but I'm seeing strength returning into the market. We can see Cardano. Cardano, unfortunately, is a little bit under the weather, but it's certainly coming up to support. Poor old ADA not doing too well. DOT is coming back and has just passed through a level of resistance. It's under resistance at the moment. It has a level of support at 31.94. We can see DOGE. DOGE is doing its best, but I think it will find a fair degree of support around the 2008 mark. Looking through some community favorites, Veracity VRA coming back to a support level. We want to see VRA breach resistance. That is always our sign. We can see Icon coming back to a level of support and bounce like a Super Bowl. We also have this upward support coming through here. That's looking quite nice. IOTEX is coming back to a lower level of support. It's been coming back to that for a little while. IOTA is seeking to get above this support level and turn around. We see quite a lot of consolidation action through here that will actually positively support IOTA's price for it to move forward. IOTA's chart is actually quite good. MTV is under resistance at the moment. We can see Chili's coming back to support. We can see also when you see a very big spike up, they're often a really good thing to sell into if you're trading. I like to show you many charts because you're subconsciously learning about spikes and stairs. Go up the lift, come down the stairs. Go up the lift, come down the stairs. It's really important to understand this kind of price behavior. Often people will get carried away and say, oh, I'm missing out, I'm missing out, I'm missing out. That's where we combine the trader's mindset to the investor's philosophy. It's literally unbeatable. A lot of investors look at their investments, in particular cryptos, and say, oh, I'll just buy at market and it doesn't matter what price I get because it's going to go up over time. That is not the most effective attitude to have. If you think like a trader, if you time your entries and your exits like a trader, you'll be much, much more of a financial blessing to yourself and those you love. If you come in at the high peak and you find that price goes against you, you could be shaken out of your position. You may feel something like this: I'm certain I was right, I'm wrong, oh no, I have to get out. And you sell it only to see it reversing and going up. And then you say, oh no, it was going up. Look, it's been going up for a while now. I'll get in. And then it drops and you say, oh no, I got it wrong again. I'll sell. This is what happens to a lot of investors. And this is why I show you so many charts. I'm trying to share with you the idea that things go up and they come down. Create support, go up, come down. Create support, go up, come down. And sometimes they violate support. They break through support. These are the very powerful things that traders know. As investors, if you're investing and you have a trading mindset, you're going to be 100 times more effective. That's why Rule 138 is so critical to understand. All investors become traders whenever they buy or sell. Every trader and every investor goes through 4 stages to consistent profitability and real wealth. Zone 1 is the panic zone, where it's all about fear of missing out, or fear, uncertainty, and doubt. All those F words are really bad. They will leech your money straight out of your pocket. Zone 2 is the blame zone. It's all about external panic, conflict with others. And that's really about saying, I want certainty, I didn't get it. Whose head can I put on a chopping block? When you get into Zone 3, you leave certainty behind, because having a focus on certainty will just terrorize you and basically make you lose a whole lot of money. Moving from certainty into probability, that's what Zone 3 and Zone 4 are about. They are founded on probability, especially probabilistic fearlessness, which is you trade the chart in front of you. And there are a lot more things to that. And I go through a lot of things that I don't cover in this main channel through the masterclass. What we see is it's all about knowledge and forgiveness. Forgiveness for understanding that you wanted certainty but you couldn't get it because the markets don't give you certainty, you just require probability. And when you do the learning, you can become patient. You can put in rules. I'll share so many rules that I have never shared in public before inside the masterclass that I'm putting together currently. You will also use volatility for your advantage. The 10-5-10 fund is not about greed. It's about buying the dip, but buying the dip really, really intelligently. A lot of people say buy the dip on the first of the month every month. I have to say that is really silly advice. You want to buy the dip when the market has gone the reddest it could possibly go, or it's selling off double digit. That's when you want to get in. That is very effective dip buying, and also understanding how dips work. A lot of people think that a dip is 1 day, and they're really terrified to learn that it could be 2 days, 3 days, 4 days, 5 days. It can go up to 11 days. Understanding dips is really, really important. Zone 3 is the patience and rule zone, where consistent profitability lives. What is consistent profitability without a positive life trend, without having meaning in your world? Jesse Livermore, the founder of day trading, was an incredibly talented individual. He definitely was consistently profitable, but he did have his ups and downs as well. But he didn't have meaning. Jesse Livermore took his own life because he felt he wasn't worthy, and his children took their own lives. Just think about it. People with a lot of money, if they don't have meaning, can pass intergenerational poverty through their family lines. That's why I say that meaning is so important. Focusing on meaning will prevent Jesse Livermore type scenarios playing out in your family tree. It's vital. What I was saying about investors and traders, it's good to see the parallel between what an investor does. Investors want certainty. Who doesn't? That's fair. And when they get certainty, the market will punish them. They'll lose their money. And then they say, oh no, I've got it wrong. I need to sell. And things turn around. Investors are notorious top buyers and bottom sellers. And everybody goes through it. If you're doing that right now, it's totally normal. You're just on the path. You're learning. Don't worry about it. There are better days ahead. The very fact that you're in our community means that you're very fortunate, because you can change your mindset to a trading mindset. I see so many other channels out there. They're full of FUD and FOMO. They really mislead their communities, and they do it because they want advertising, and that's not a good thing. We can see that traders buy when they get confirmation of technical signals, and they sell when those confirmations are violated. They're literally the opposite of investors. But I believe the ultimate mindset, the ultimate combination, is the investor-trader intersection. Traders can learn a lot from investors. Traders can learn to hold their positions longer, to go forward. And it's really, really important to combine the best of both. I hope that makes these spikes a little bit more understandable. If you ever get carried away and you see something spiking, literally going straight up the wall, what do you know? It's going to come down. Do they come down all the time? Yeah, about 95% of the time they come down. Even when we look at something like Loopring, if we just pop in here, what we can see is that price is always going up and then coming down. Even though it looks like it goes straight up, we're getting these retracements. When you trade, you know when to get in, because there are certain signals that are inherent in the market. That's a really important thing to understand. When we look at something like CTSI, CTSI is very spiky by nature, and that is fantastic because you can use these spikes to your advantage. Notice this consolidation along the support line and explosions up. When we look at this, let's just do a bit of a measurement. From that explosion, up to here was about over 100%. Let's just call it 100%. If you buy something for $1,000 and then it goes up to $2,000 and you understand the spiky nature of it, you can just exit your position and wait for it to come down to support again. This is fantastic. What you will find is that over time it will not keep meeting the support line. It will form a higher support line. That's fantastic. That means it's about to take off. It's always really good when you look through these charts to try to identify up to 3 charts that you think have positive momentum. There are always opportunities in the market. You can see exactly with the metaverse at the moment, if a particular area has the market's attention, even if the market comes down, there will be a lot of people pouring money into it. This happens throughout every cycle in the crypto space. We can see that SHIB is finding a level of support. Luna is just under resistance. Look at AVAX. AVAX is looking really strong. It's been able to maintain this upward line even though Bitcoin has been selling off. We can see Litecoin has come down as Bitcoin has come down. You can see certain cryptos have a lot more confluence or a lot more attachment to Bitcoin's gravity than others do. We can see Chainlink coming down as well. It's really important to understand these dynamics, because when you do, when Bitcoin bounces, these ones with high correlation tends to bounce as well, very well. We can see Uni coming down below resistance. I wanted to point out Algorand, because Algo is has a really important price to understand here. If we look at the chart, you might remember this spike up to $3, and a community member said, "Ken, I got my order filled." Congratulations, my friend, you are a legend. What do we see here? Algo was under resistance. We had a very nice support on this upward line, then it dropped under resistance. There was some news in the market and it spiked. What do we see here? When price comes up to a previous support level that's turned to resistance, it needs to wobble around. What literally happens, there are a ton of sellers saying, "I'm going to sell this thing down" when it reaches support, when it's underneath that. So what we actually see here, I'll just zoom in a bit more for you. What we see is that when price is below a particular resistance level, it does this kind of behavior. If it shoots through, that's a spike you typically want to sell, because these spikes tend to reverse back. This is the power of having a trading mindset. But it depends. If you're investing and you wanted to accumulate algo, if you accumulated algo at $3 and you went all in at $3, please never go all in. Just do everything in layers, either scaling in or scaling out. If you did that, you now have to get a price above $3 to start making profit. You can see how important actually where you buy is. You always want to buy lower. It's not being stingy or anything like that. It's being really focused. I'd like to thank all the very kind and generous community members who've reached out and shown their appreciation by buying me a coffee on buymeacoffee.com/cryptotradingks. Thanks so much, everyone. I'd especially like to say thank you to John. Keep up the great work, Ken. Really appreciate the analysis and level-headed, no hype advice. Thank you, John. Very nice of you. To Vince, I love your comment. Vince had a comment underneath here. Vince, you're quite a character. Fantastic, my friend. NA, the person who shall remain nameless, thank you so much. Very nice of you. Badger, hi Ken, I'm happy to be on the road to self-mastery thanks to you. Wow, that is beautiful. I'm really excited about the coming masterclass. It's going to be awesome. Cheers, my friend. Take care. Thanks so much, Badger. I am so happy with the masterclass content that I'm putting together for everyone. I'm actually covering off realistically 35 years of inventions and discoveries in the financial markets, and I focus on teaching you how to practically apply. So from the very first lesson, you'll find that it's all practical. There's no theoretical stuff that you have to look at and then you go back and try to figure out how to apply it. I start on the practical application and then show you how the theory relates to that. I'm really, really happy with it. And it's going to have so much more information and so much insight into the market that you won't think it's possible. I've noticed some new people in the coffee club. I just want to let you know that every month I put a special coffee club video together, and you can access it through just clicking. You need to log in and then you just click the post button. This is just a little video that I pop together to say thank you so much for your support. It just does a deeper dive on something or introduces a new concept that I've not previously spoken about. You can get to it just by clicking the post button. This 10-5-10 rule is quite good as well. They're all good. Everything that I put in here is aimed at giving you some kind of edge. It's just my way of saying thank you for your very kind generosity. I'm still putting the masterclass together, but if you would like to express your interest in being part of the masterclass, it doesn't assume any previous technical knowledge at all, any previous knowledge. It's all about building everything up from absolute basics, and it's focused on 100% practicality. I've looked at so many courses and so many different classes out there, and I find them incredibly lacking. When I was lecturing first and second year statistics many years ago, I built up my students' knowledge through the numbers 1, 2, 3, 4, 5, and they could understand the most complex areas because I was making things simple for them. If you would like to lock in your very substantial masterclass discount, please reach out and email me at ken@kenstanfield.com. StanDfielD has 2 Ds, StanDfielD. That's ken@kenstanfield.com. I'd love to hear from you. The focus of our community is on real wealth. Real wealth is much more than just money. Money is a wonderful thing, but it's an unlimited commodity. You can never have enough of it. I raised the example of Jesse Livermore today for a very specific reason. Many people regard Jesse Livermore as an idol, something to be followed and acknowledged. And Jesse Livermore absolutely was talented. Jesse Livermore knew how to trade. He developed day trading. He was a very clever guy. But the story of Jesse Livermore's life was not so nice. There were so many problems in Jesse Livermore's life. He lived in constant conflict without any inner peace. He didn't have outer peace either. Jesse Livermore felt unfulfilled and had a life that he felt had no meaning, and he didn't feel worthy. What a very upsetting and sad situation for people to find themselves in. And I think it happens because people do not focus on real wealth. Our community is so different. We, of course, focus on being more of a financial blessing to yourself and those you love, but we also focus on the components of real wealth. I will be bringing out a real wealth video today. I think you'll really like it, and I want to do a special call out to Martin. Martin's such a wonderful community member and has had some really good news recently, so I want to share that with the community. It's possible that if Jesse Livermore was part of our community, I know we can't time travel, but if he was, maybe his life wouldn't have ended the way it did. Maybe. When you understand that you're worthy and unique, there's only ever one of you in the entire history of this world. You're really special, and the world needs your positive gifts and positive excellence. Therefore, you absolutely deserve kindness. You absolutely deserve love and meaning and every success in life. I would like to thank everybody inside our community, such beautiful, wonderful people. We have scam-free comments on YouTube. Any scammer that pops up on YouTube, the community and myself, we all do our best to eliminate that scammer as soon as possible. And I've seen so many other channels, they're full of scam comments. And you can't have a community discussion surrounded by scammers. So we do everything possible to get rid of scammers. And I want to thank the moderators so much for keeping our community safe from scammers. You're just wonderful people. Thank you. Another thing that people generally say, our community members say, they say, Ken, why doesn't your channel grow more quickly? It's because we delete the scamming comments. The scamming comments always come with likes, 100 likes, 200 likes, whatever it is. There's likes everywhere. But we delete them because true success is not stolen, it's earned. We don't care if we grow slowly as a community. We're attracting the right people as we go. Of course, it would be much nicer to reach more people, and that's why so many community members reach out and tell their family and friends to have a look at our channel. I so appreciate it. The more kindness, the more love, the more empathy, and of course the more financial blessings that we can create as a community, the better everything is for everyone. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Please say hi and let me know where you're viewing from and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left many helpful links in the description of this video. If you haven't had a chance, please have a look at the description. It's got some really interesting things in there. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, take care, and see you next time. Bye for now.